All right, so we are here today with Stace Casaria. Stace is one of my clients. Stace is a branding expert. He is also a real estate investor, multifamily investor, and I am helping Stace grow and scale his multifamily business, as well as exiting the W-2 world and starting his own venture, his own enterprise in the world of full-time entrepreneurship. So Stace has a lot going on, and thank you for being here, Stace.
Oh, thank you, Greg. I'm excited to be here. And like you said, we do have a lot going on, and making the jump from W-2 to my own venture is exciting. I've got a lot of things cooking, but I'm happy to be here and share the insights that I have with your guests.
Yeah. So how long were you in the corporate world?
Yeah. So I would say a little bit more than 20 years. Toward the end here, off and on, I had my own freelance business going. I had my own freelance clients, but I would say about 20 years of corporate work.
Yeah. Yeah. So now the world is your oyster, right? It's a whole new deal, a whole new perspective.
It is. I'm responsible for my failures and my successes. So it's actually pretty liberating. I mean, there are some times when it's a little bit nerve-wracking with the income and not knowing that it's going to be guaranteed at the end of the week. But being responsible for your own successes is huge as far as fulfillment goes.
Yeah, yeah, that's awesome. And I know a lot of people will be encouraged because, especially right now, October, today's October 1 of 2020, we are still in the middle of the pandemic. A lot of people have lost their jobs and have had to pivot. And I've helped a number of people pivot into entrepreneurship, and there's a lot of ways to replace that income, that W-2 income, and start your own business. And especially in this world of e-commerce, this world of online that we are all embracing now, and remote working, a lot of different ways you can do that. So let's shift now into your new business venture, and let's talk about your company. So what's the name? What's it all about? What are you doing?
Sure. Thank you. So my company is called Trust Deep Branding. I'm a branding agency, and I help businesses and syndicators create deeper connections with investors built on mutual trust. We help syndicators create their own unique brand, find out what they stand for, find their true north, and find ways to appeal to investors.
Right. So syndicators or real estate investors, anybody who's looking to raise capital. So what you do could work for somebody who's wanting to raise capital for a business. They want to raise capital to flip houses. They want to raise capital to buy big apartment buildings, commercial multifamily. So not just syndication, but anybody who needs to build a brand to attract opportunities.
That's right. That's right. And
yeah.
I should also say, outside of real estate, we also work with other entrepreneurs and other businesses as well.
Yeah, absolutely. So tell us about branding then. Why is branding important? If I am a real estate investor and I'm just getting started and I want to go syndicate big apartment deals, or I want to raise capital to buy houses, or I need motivated sellers, whatever it is, why is brand important?
Sure. The first thing I would want to start with is explaining what a brand is, just so we all have a common knowledge and we're all talking about the same thing. And a lot of times, when I'm at meetups talking with other investors or syndicators or even brokers, I'll ask them about their branding, because I'm always looking to have a conversation with somebody about branding. And they might tell me, hey, I have a logo, I have a website, or they'll hand me their business card. But those things are not your brand. Those things are expressions of your brand, but your brand is so much more than just a logo or a website. And if we take Nike, for example, and I asked you, hey, what is Nike? What's Nike's brand? You wouldn't say Nike's brand is a logo. No, you might start by saying, oh, they're a shoe company, or they're an athletic wear company. And if we drill down, we'll start to understand what makes Nike unique from any other shoe company. Well, Nike's mission is to have everybody believe that they can be a champion. That's what makes Nike different than Puma or Converse. That's Nike's brand. Your brand is what you stand for, and your logo is just an outward expression of that. But being a brand doesn't mean that you have to be a large company like Nike. It just means that you have a true north, or you found your true north, and you can express it in a way that shows people what your mission is, what your vision is. And that vision is going to guide you through every decision, every choice. That's what a brand is.
So a brand sounds like is a lot about how it makes you feel and what it can help you do versus what it just what it is.
Oh, absolutely, absolutely. So the crux of your brand are those things that are based on emotion, rather than the tangible things like your website or your business card. Those are expressions of your brand. And there's a risk in any business not defining what their brand is. The risk is that you can be seen as a commodity versus a brand. And the difference is that a brand is something that's recognizable. It's a differentiated entity that creates a desire in those who seek it out. It creates an emotional response. Whereas a commodity is somewhat generic and is interchangeable with any other commodity. And we see that like on store shelves in the supermarkets. There are brands that I go in and I want that brand. There's a specific thing that I'm after because of the way it makes me feel. And we think about like Coca-Cola is a really great example of that. There are lots of colas on the shelf there, but there's one particular brand that I really like because of the way it makes me feel. And I have an association with that brand. Another very good example of brand versus commodity is if we think about coolers, like beach coolers. And before Yeti existed, we probably didn't give much thought to the brand of cooler that we purchased. It might have been Igloo, it might have been Coleman, who knows? But we didn't have an association or emotional attachment to that brand. But Yeti created a brand that stands for something, and they stand for, quality to survive your toughest adventure. And you can see how they created brand loyalty by, if you look around, like you probably have friends who might have a piece of Yeti clothing, a t-shirt or a hat or a bottle opener that says Yeti on it. I don't know anybody who's ever had a Igloo t-shirt. I don't know, like that just wouldn't happen because we don't have an emotional attachment to those other brands. But Yeti created a brand that said this can be something more than just a box that keeps your Coca-Cola cold when you're at the beach. This is something that is part of your life, part of your adventure. And they really did a great job creating that brand.
Yeah. I love that analogy, the commodity versus the brand, right? Or what was it, commodity versus necessity?
No, brand versus commodity. Yep.
Brand versus commodity. So, a commodity is something you need, something that, that you want. A brand is something you have to have, right? There's a difference between a want and a need and a have to have. I have to have that. I need this, but I have to have that. So that's what's really cool about a brand. And then when you convey that, into an individual like a real estate sponsor or something like that, and you think about prolific real estate syndicators and sponsors out there like Grant Cardone, okay, he's a syndicator just like anybody else raising capital, but he's created a personal brand that people just have to be a part of that movement and have to be a part of Grant Cardone. Now, whatever you think about Grant, that's not the issue. What I'm talking about is he's built a brand and, with his style that people want to be a part of, that, you can invest with a lot of different people, but some people are just, I have to invest with Grant. I just want to be part of that brand, and in that movement. So it's really interesting, that distinction there. So let's talk a little bit about brand identity, number one, brand loyalty, and brand equity. So you have image, identity, loyalty, and equity.
Well, the thing about Grant he has defined and articulated what he stands for. So it's important for any entrepreneur or syndicator or business professional to understand what sets them apart and what's the thing that's going to help them identify differently than any other commodity that's on the shelf there. And, your example of Grant is a really great one. What he's been able to do is position himself differently than others and create brand loyalty. So right now, I would say in the past several years, there are a lot of people looking to invest with syndicators. And so maybe every syndicator who was looking to raise funds for a deal was able to find all the investors they needed. I don't know if that's true, but let's just say that's true. I would say going forward, syndicators are going to have to work a little harder to find investors. Somebody who's created a brand for themselves has developed brand loyalty And so they're not going to have to work as hard to find the number of investors that they need, because people recognize who they are, people know who they are, they have name recognition, and people have trust in them. So those who are loyal to Grant are already his investors, and they'll invest in his next venture as well. A syndicator who does not have brand equity, brand loyalty, hasn't created a brand, is going to have to work very hard to find the number of investors he needs to complete that deal. That brand loyalty is going to translate into brand equity. There's true value for any brand. It's, if you take a brand like Coca-Cola and you say, what is the business worth? Well, of course they have earnings, they have physical plants, they have things that they own, but the brand itself has tremendous value. And if you were to take away the logo and the name and all the emotion that goes along with that product, it wouldn't be worth as much as it is with those things included.
Yeah, we're seeing a lot of cases of that. So let's take companies that are not making any money, losing money, that are going public, right now in this day and age for billions to hundreds of billions of dollars, have no revenue, have nothing, but the value is in their customer base. And we're seeing over and over and over with companies like, Uber, that's not profitable, Airbnb, that struggled, didn't make any profit, Facebook, when they first came out, no profit, but they had that brand loyalty that created that equity, that created value. Traditionally, businesses trade on a multiple of EBITDA, earnings before interest, taxes, depreciation, amortization. And, in coronavirus, you could call it EBITDAC. Coronavirus is throwing a little wrench in there. But, that's the traditional means of valuing a company. And then there's assets and physical, like you said, locations and properties that come into play as well. But if you take the brand out of Coca-Cola, then you just have another beverage distributor. And the question is, could you put, because I prefer the taste of Coke over Pepsi, Diet Coke over Pepsi. I'm a Diet Coke drinker. If you took that out of the equation, the brand, and you put Coke and Pepsi side by side, am I going to continue to grab one over the other? Because I don't know what it tastes like. So what's going to draw me to that? How successful is it going to be? Even if I do taste it and Coke's not on there and Pepsi's not on there, what's going to draw me to that other than taste? So it's that brand, that image that's created, that ultimately creates a lot of value in a company. So that's a very interesting topic and discussion that a lot of people don't think about a lot of times in their company. So when you build a business, when you build a brand, you always want to have an exit in mind. Even if you're a real estate syndicator, at some point you're going to exit that business. So if you've built a brand, let's take Joe Fairless, for instance. Okay. Mm-hmm. Joe Fairless, a lot of people know him. I know you're going to be on his podcast soon. So look out for that, people. Stace is in high demand. He's on all kinds of podcasts these days. So we'll tell you where to go to find him at the end of this, and you can learn more about Stace and the branding world of branding and what you need to do for your business. But look at Joe. So when Joe started out, he was in the advertising world, and he created the best ever brand, which created that loyalty that now has equity. He could sell his operation, best ever. It has value. He has books. He has a podcast. He has that brand. He has a conference that he's created, kind of like Grant Cardone. Same kind of model that he could now sell, that anybody could step into and kind of take that over. So it's very interesting to think about. I'm just a real estate syndicator. I need to build a brand that generates, capital raising and deal flow automatically while I'm sleeping.
That's it exactly. That's what your brand is going to allow you to do. So sometimes I think people who are starting off will say to themselves, I don't need to go down the branding process, or they don't even give it that thought. And so I like to ask, well, who needs a brand? And help people see that any syndicator who wants to stand out today should be a brand. Any syndicator who wants to protect their future should be a brand. Any syndicator who wants to turn prospective investors into repeat investors needs a brand. A brand gives the syndicators or any real estate professional the power to take investors down a path from knowing them to liking them to trusting them. And the goal is to generate authentic trust, because that's how mutually rewarding business connections are made. Brand is the beginning of that. If you don't mind, I just want to talk a little bit about how somebody might become a brand. And it's It sounds simple. I think there are three things that have to happen, but they have to happen in a specific order. And there's a little bit of science to it. So the first thing is you have to find out what you stand for. You have to do an evaluation, either yourself or with a branding professional, to understand those things that within you that are authentic to you, that make you stand out and different from other people in the same line of work as you. You also have to find out what matters to your customers. And then you have to use that intersection of those two things, what matters to your customers and what you stand for. And those things create your brand. It's not rocket science, but it does take quite a bit of time to dive into and understand those factors to create a compelling brand. There are some brands.
So yeah, it's not rocket science. It sounds simple, but yet people and companies miss it over and over and over. And, you know, we could cite all kinds of case studies of individuals and companies that have created a brand that just flopped because it didn't line up, like you're talking about, with the core values of who they are as a company, individual, business, and who their ideal clients are as individuals, which is really what you're doing, right?
Right. Absolutely. And so, yeah, there are those instances of brands that are complete failures or flops, like you said. And then there's some that just aren't as successful as other brands. You know, we look and we see, like, why is brand A so much more successful than this other brand over here? And it's because that successful brand has identified some emotional need or functional need. Usually it's more an emotional need that its customers have, that they're able to fulfill, not just fulfill, but they're able to articulate that they're able to fulfill it. So defining your brand and articulating it are two central elements to creating a brand. I mean, it happens in things we choose every day. There are differences in brands. And so some are more successful than others, and some just appeal to different people. So if you take like Starbucks and Dunkin' Donuts, both hugely successful companies, they just have established very different brands, and they each stand for something. The same with, like,
you know, what's interesting there is that people go to both for different reasons, right? That's what's really cool. Like Dunkin', you know, I mean, it's a Northeast thing where it originated, right? And people are loyal to they love that Dunkin' Donuts, man, but it's all about the coffee. A lot of people think donuts, it's all about the coffee. They love the coffee. And I will tell you, Dunkin' has a better cup of coffee than Starbucks. And I'm sorry if I'm offending anybody, but it just is what it is. So Starbucks coffee is horrible. It's nasty. But people love the image of Starbucks and how it makes them feel and how they're perceived because they have that cup in their hand. Whereas Dunkin', that's just a good cup of coffee.
Right. Yeah. And that's the thing, is that both are extremely successful, but that emotional need or functional need. So in the case of Dunkin', you're talking about a functional need. The coffee is better, and that's subjective, but I hear that from a lot of people. I'm not a coffee drinker, but I've actually heard that people love the taste of Dunkin' over Starbucks. But Starbucks has just created this entire experience. Both companies hugely successful. There's plenty of room
the fancy
for both
drinks.
companies.
You know, Starbucks probably has a better, you know, menu of fancy drinks, and I think they started that first. But you know, coffee to coffee, I drink black coffee. McDonald's has probably the best cup. Then you got Dunkin', then you got Starbucks.
That's right. That's right. And if we take it back to the multifamily investing world, like you said, McDonald's and Starbucks and Dunkin', 3 cups of coffee, and they have to create a brand identity so that people know which is which, and they'll choose them. The same with the people who are starting out as syndicators. You're going to have a similar pitch to every other syndicator out there. And so, like, Greg, I think both you and I have looked at syndication deals that we might want to invest in. And, you know, they all look the same on the surface. Of course, you're going to dive in they're different locations or they have a different exit strategy. But to somebody an investor looking into those deals, the pitch is very similar. So you're going to have to find a way to generate awareness and differentiation between yourself and other syndicators so that investors know who they want to invest with, and not just once, but repeat investors. You have to show the potential investors what you stand for, and you have to carve a niche for yourself.
Yeah, you know, and that's true. Offering memorandums pretty much all look the same. Some are a little more fancy than others. Some have a few more infographics than others, and people are getting creative there. Some have video presentations in them. But at the end of the day, what I coach people, what I tell everybody is, if you're going to attract capital, whether you're a business, real estate syndicator, whatever it is, your image needs to be congruent across all your platforms, all your social media, your website, and all that. So the first thing you need is you need a website that expresses your brand, and then that has to transfer across all your other social media. Because the first thing I do, whenever I get a proposal, whenever I get somebody looking for whatever it is, I go to their website. I look them up. I go to their website. That's the first thing I look at, and that tells me how put together they are. You know, how well do they convey who they are, what they do, and how they do it there. That's number one. Then I'll check them across social media, and I'll see if they're consistent and congruent across all of that in terms of their message, LinkedIn, you know, the whole 9 yards. You know, how professional are they really and how put together they are. And then I also look at in the offering memorandum itself, how, you know, how organized is it? How professional is that? Is it, you know, is the spelling done correctly? Is it laid out well? Is it easy to navigate through? Does it convey the message? You know, all those types of things all convey what kind of brand you are and what kind of operator you are. And a lot of people miss the boat on those items, and just, you know, makes a big difference.
What you're describing is that progression from knowing somebody to liking somebody to trusting somebody. And so if you start with the first thing you said there was like their website. So the website is going to show you, it's going to allow you to know them. You're going to know that they exist. You're going to learn a little bit of information about them. And when you dive a little deeper, you talked about seeing them across social media. That gives you the sense of consistency, and you're going to start to either like them or not like them. I'm guessing you're going to like them if you see consistency, and you're going to learn a little bit more about the personalities of the people involved. That allows you to get a little closer to them emotionally. We generate appreciation for people or some sort of affection. We've liked them. And the last thing you talked about in the offering memorandum begins to get toward trust. It's really hard to create true trust, but those things begin to do that when you see that there's consistency into the offering memorandum, and the math works out, and you see that they're professional, they spelled things correctly, and there shouldn't be misspellings in anything, especially in this day and age where we have spell check. But it's the brand is all about bringing people down that continuum from knowing somebody to liking them to trusting them. Trust is the absolute foundation for meaningful, successful relationships, whether they're in your personal life or in your business life, especially for in commercial real estate. I mean, this type of investing at that level where you're trusting somebody with $50,000, $100,000, $1 million of your money, trust is critical. And it can't be formed by words alone. You can't tell somebody to trust me. You have to create it by your actions. And what you're talking about, your actions in social media, or the reviews that people have left for you, or the name recognition and the reputation you have, that's what builds trust. Not your marketing message that says, hey, come and invest with us and trust with us. It's the things we've done in the past that generate trust in the future.
Yeah, exactly. And, you know, a lot of people think it's about the deal. You know, hey, I have this great deal. It's just, you know, super value. I've got these huge returns. And, you know, that might initially attract some interest, but if you're not put together everywhere else, you're going to lose that trust right away. And if you're over promising, you know, especially right now, exponential returns, people can sniff right through that and look right through that. But, you know, in my experience and through my career, and I've been doing this since 1997, and I've raised hundreds of millions of dollars in capital for deals and businesses and things like that. And I've helped clients raise billions of dollars collectively. The interesting thing is that once you've conveyed that brand, people get to know, like, and trust you, and they've done some business with you, it no longer is about the deal. They're like, I trust you. Mm-hmm. Tell me where to send the money. You know, it's like, hey, Stace, you know, I have this new deal I'm working on, you know, let me send you the offering memorandum. Nah, I trust you. Just let me know where to send the money and when. You know, I mean, it literally gets that easy. So people reach out to me weekly, I want to say almost daily, looking for opportunities to invest in what I'm doing, because I've been doing it and I've built that brand, you know, and people know that they can trust me. And especially past, you know, investors that I've had that I do deals with and have done deals with in the past, they don't even care about the deal. They're just like, what are you working on? You know, I want to be part of what you're doing. You know, it's kind of like we talked about with Grant Cardone and Joe Fairless. I mean, it's almost to the point with the brand that they built. The offering memorandum and all that stuff is just academic. You know, people know they can trust them. They've done business with them multiple times. And then that breeds confidence throughout, the industry and community with other investors, so it's a really interesting and important thing that I think a lot of people take for granted.
It's true. And I'm glad that you brought that up. So something we do at Trust Deep is we don't just do branding the way a lot of branding agencies do it. We mix a fair amount of science and understanding of how decisions are made with our branding expertise. And what you're describing there is this term that I've come up with. It's called decision friction. So decision friction is the hesitation or pause we take every time we have to make an important decision. And once you create trust through your brand, you're able to eliminate that decision friction. And what you're talking about with investors who aren't even concerned about the deal, they just want to know what you're involved in next, and that they will send you the check. It's because they've already vetted you, and the decisions are made in our brain subconsciously. And so whether you're buying, a can of Coke off the shelf in the supermarket, or whether you're choosing to invest in somebody, there's a decision process that happens in our brain, and there's a hesitation, and it's subconscious. We generally cannot detect it. But once you've established trust with somebody, that box has been checked, and your brain knows that the risk is far lower with this person or this business entity that you've already established trust with. So there is incredible value in establishing a brand for the syndicator, because they are able to, they've got that trust, and there's less hesitation on the investor's part. But this is something there's a second element, and this is something you talk about, Greg. You talk about like selling is serving. Mm-hmm. When you create a trustable brand, you're actually making it easier for your investors to invest. You're removing a piece of anxiety from their day. You're giving them back a little bit of their mental energy. That they don't need to make those decisions or weigh the risks and the rewards in the same way. You're simplifying the process for them, and you're also helping your brand itself. So there are a number of benefits that come with creating a trustable brand. They happen for the syndicator, and they also happen for the investor. So you're doing a service to your customers by creating a brand. You make it easier for them to operate in the world that they're trying to operate in, whether that's going shopping at the supermarket or buying a cooler, or investing lots of money with a syndicator.
Yeah, that's awesome. Well, let's start wrapping this up. Is there anything else that I didn't ask you that you would like to hit on real quick before we wrap it up?
Yeah, well, I would say that there are a number of benefits to creating a brand for a real estate professional or a syndicator. And you can find detailed explanation on our website. Our website is trustdeepagency.com. We have a number of resources there for real estate professionals, and we're creating more as we go on. But people can reach out to me at the website and get in touch with me. And if you want a free brand consultation, we can do that. We can talk for a half hour. I can see what you're working on now and show you some quick ways how you can improve that.
Okay. Yeah, I'll put a link in the comments to your website there so people can just click on that. And so what services, well, I guess we'll just let people go to your website, but you're doing the core branding stuff, but you also help with collateral, like, white papers and email autoresponders, things like that, helping people create their messaging and all that.
That's right. So we define brands and we articulate the brand. So we will help somebody establish their brand, find out what they stand for, like true differentiator, and then we'll help them execute by creating content, whether it's a website or emails, newsletters, blog posts, whatever they need to help get in touch with investors or whoever their customers are.
Yep, that's awesome, man. Selling is serving. As a business, as an entrepreneur, we are solving problems. We are serving people. And if your brand doesn't convey that, people are looking for solutions. They're looking for convenience. They're looking for brands that they can trust. And if you're not doing that from the second that they see you, you've lost, a lot of equity right there, right off the bat. So Stace, thank you for sharing your expertise today. And And again, I'll post your trustdeepagency.com website in the notes for people to be able to click on and set up some consultations with you. And I look forward to chatting with you again soon.
Absolutely. Thank you very much for the opportunity, Greg. Take care.